Wanted to take a look at the options trading strategy that I've been putting on over the past several weeks. I've been putting up a series of videos, options trading for beginners, to kind of break down what's going on in the options market, how you should be looking at these data points, what I do in some of the trades I made. I'm looking at my trades from Thursday, where I put on actually 2 simultaneous trades starting at the day. Oftentimes I look at the market and I say, no idea what direction the market's going to move. Because of that, I'll put on what's called a straddle options strategy. And this one, SPY stock off of SPX, of course. After the market opens, I will put on a put and a call at the money, 0 DTE, with the expectation that mathematics and averages, I will be profitable over the long period of time. Now, I've had several trades have worked out very well. I just put a video up yesterday where I talked about Wednesday's price action. Of course, we saw some big moves, but today, Thursday, from the 23rd of May, that was a very big moving day, and I made some money, but I missed that move. At the same time, I have 2 trades on. I also have a credit spread calls 2 days out. We've got a 3-day weekend here in the United States. Let's jump in and I'll break down these 2 trades and show you how I put together my options trading strategy. Here's a look at SPY stock. This is the 2-hour bar chart. Goes back over close to 2 months, actually. We've had a strong rally. The night before, of course, you can see a big spike up. We had seen a move downward because of the meeting minutes for the Federal Reserve. There was a sell-off, but then it rallied right back up. Then NVIDIA announced their financials for the quarter. The broader stock market, of course, rallied, and I didn't really buy into it. First, I think we've probably tapped out. Bond yields continue to move higher, and that kind of pumps the brakes. So one of the very first trades that I'm looking at is putting on a credit spread 2 days out, which being Thursday expiration. I'm actually looking for Tuesday morning in the United States. Monday morning, of course, we have a holiday. It's actually in the afternoon. So I'm taking advantage of that 3 days where not a lot's going on, but there's some theta there. So I do not think that we're going to see 535, 536 level Friday, then going into Tuesday's price action. Because of that, credit spread. And I have those numbers broken down. At the same time, waking up this morning, looking at the put calls at the money, 0 DTE with a 530 reference. Here's the numbers. Of course, it was 532.05, I think is the actual reference when I put this together. There's a big rally upward, but bond yields continue to move higher. So can we get some kind of movement upward? Now, this is what the 3-minute bar chart looked like for SPY stock when I first woke up. And the market could easily rally. The market could easily fall. The market could easily go sideways. I need the market to move a certain amount, and on a statistical basis, that happens. We don't get rallies nearly as much as people hope or wish would actually happen. But we do get price movements. Statistically, looking back 100 days, I have those averages and I have a pretty good understanding of how much the market will move intraday, what the high, what the low will be on average over the past 100 days. And I can reasonably assume we'll continue to stay in there. But there are a few things going on in the outside that are going to affect the market. I just don't know if they're going to affect it positively or negatively. So a straddle at the money calls 0 DTE after the market expires. Buy the put, buy the call. But at the same time, I also put on a short credit spread for calls. Now, the nice thing is, if I'm wrong, if the market rallies, I'm covered on my short credit spread because I have the money call. If I see no movement whatsoever, which we'll probably see some kind of intraday movement, of course, my credit spread makes money. If we see a decent move to the downside, I'm sitting even better. So Here's the reference. 530.05 was the price action when I put these on. 0 DTE, 533 and 534 calls, selling the 533s, buying the 534s for protection, but I also bought the 530 put and call 0 DT, but this credit spread was 2 days out. Here are the averages. Now the cost on that, of course, is 18 cents credit to me. On average, we're looking at about a $2 move, 2-point move on SPY stock. So there's a little bit of room there. If we see some kind of rally, again, I have my credit spread. I would still make some money there, but my call for my 0 DTEs, the straddle that I have on, would be very profitable. If we saw a move all the way up to 434, I'd be up 400 or $4 or 400 on the SPY 0 DTE straddle. I start losing at 533 because of the credit spread, but I don't care because I'm really not losing anything. If the market just keeps going, I make even more money. Nonetheless, that's that leg of that, but I'm looking for 1.79 on average move. This is what the cost was for the call and the put. 530.05 was the reference. I am looking for some kind of movement, and I actually think that the stock market is probably going to be moving lower. Now let's take a look at the numbers again. 1.79 is what I'm looking for, so I need an average move that exceeds 1.79 plus about 50 cents profit on this straddle options trade. On average, we kind of get that. The open to the close, you're looking at it on average of 2.14. The high-low range, you're looking at about 213 there. So there's a lot of movement there that we could probably see what I'm looking for. Now here's a look at the actual movement. Now when the market was at 533.0, that's when I put these on. I took my profits at 529. I was a little bit below 529. The thing is, I took that profit pretty quickly, thinking I'll take the base hit, because if I continue to take base hits, which is usually the game I'm looking for, take those base hits and run, I'll do pretty well. As it turns out, Thursday, there was a pretty decent sell-off, so I missed all of it, but I still made money for the day. If I miss 4 out of 5 like that, eventually I am probably going to catch one big ride, but I get all those base hits along the way, which covers my costs on my options. So to see the market move down like it did, I was pretty thrilled. The fact that I didn't get all that, I was already gone for the day and hadn't even noticed. I looked later on and I said, wow, the market just kept going. Oh well. But I had already booked my profits and left. So I didn't really care too much about that kind of move. They happen, but they're not as often as the individuals would really like to see happen on a regular basis. For me, I'm constantly looking for those base hits. I'm never trying to hit a home run. You keep swinging for the fences, you're going to keep striking out. And then you're always going to be behind. But if you keep getting base hits, base hit after base hit after base hit, my options trading strategy, this works out just fine. I'll bring in those 18 cents off the credit spread because the market has dropped as much as it has. The chances of that credit spread going negative have reduced significantly. At the same time, I made money on that straddle at the money, 0 DTE, buying the put and the call. Covered my costs, made some profits. Over the weekend, I'll collect that extra 18 cents while I'm out enjoying some mountains. Make sure to hit the like and follow button if you're looking for options trading for beginners. I have an entire playlist where I'm going to continue to put up my trades like this and show how I make money options trading. Make sure to hit the like and follow button. We'll see you in the next video.